Welcome, everybody, to another episode of SF Live. My name is Kai Hoffman. I'm the CEO of the Soar Financial Group. This is episode 9. Today, I'm joined by Dave Cole. He's the CEO and president of EMX Royalty Corp. And EMX is a royalty company, so I'm quite excited to have him on today because the royalty model is something we haven't discussed here as of late. And especially in this time, in the corona crisis time, I think royalties and royalty investments are quite sought after and are usually a safe haven investment too. So I'm quite excited to have him on. As you're all aware now, this is an interactive format, so please use hashtag AskEMX for your questions live here on Twitter. And Dave, so let's switch over to you here. Welcome to the show, and thanks for coming on the program here. It's great to have you. How are you doing?
Doing super well. Thanks, Kai. My pleasure to be here.
Fantastic. You're in Denver. I see you're in the office.
Yeah.
How are you guys handling the whole situation right now?
So far, really well. You know, everyone in the office is healthy. As you know, we didn't go to PDAC this year, the big mining convention in Toronto, taking early precautions to make sure everybody was safe and protect our most valuable resource, which is our people. And so far, you know, touch wood, everyone's doing super well. And people come into the office just for a few hours to do a few things, keep their distance, and everyone's in great shape.
Oh, fantastic. And from what I hear and understand, like we talked to Jeff Pontius last week, is Colorado is not in a lockdown scenario yet. Everybody's aware, and I'm not sure if a stay-at-home order has been issued yet, but
I think officially it is in lockdown, but it's kind of a Colorado-style lockdown where people are supposed to use their common sense.
Okay. And so far, I haven't heard much in terms of numbers increasing or anything going crazy out there. So I think you guys are doing fine. So
I think we've reached the zenith, and the rate of new cases per day, as elsewhere in the world, have started to decrease.
Okay. You mentioned you canceled your PDAC participation, and we briefly talked about it off mic and off stream here. Can you explain to us just a little more, like what led you to canceling?
Oh, geez, we were following the numbers closely. And it was, we were looking at the doubling times. With doubling times at that point in time outside of China running in the 3 to 4 day range, you could do the math. And we thought it was irresponsible for PDAC to continue forward, and we elected not to go. And I think that was the right decision.
Yeah, from what we heard, probably in hindsight was definitely the right decision. So glad everybody's doing well here. Also, you mentioned before protecting people and health and safety is the utmost importance. I'm glad you didn't say the Treasury. Right, so because you guys have $69 million in the bank,
yeah,
and like as I said before, like I think you guys are probably your phones are ringing off the hook. I don't even want to see your email inbox, right? And projects seeking financing or alternative financing. So maybe give us an update on how that's looking like right now.
So yeah, our incipient deal flow, both from the organic side of our business, where we're out acquiring projects, adding value, and selling them to an industry hungry for new opportunities, particularly on the gold side, is doing really well. You saw a press release we came out with a couple of days ago, where we sold 3 gold projects in Idaho, but also on the acquisition, royalty acquisition, and strategic investing side. The phone is ringing, emails are coming in, as has been the case now for quite some time. And we've got a full team: geologists, metallurgists, engineers, finance people, crunching numbers, and the motto is fail fast. So we're trying to look at those opportunities and quickly discern those that we're not interested in and fail those, so we can focus on the ones that look good to us. And we're very picky investors.
So what in particular are you looking for? I know you copper gold is sort of the main focus, but anything else, like regions, like because you're a bit all over the map. And remind us, how many projects do you have in your portfolio right now?
Oh gosh, it's well over 120. Yep, global mineral property positions, and that would include royalties as well as projects that we're advancing to sell and ultimately generate a royalty via our organic business model.
Okay, and that's worked out quite well. That's hence you have $69 million in the bank as of December 31st, right? So, because you sold your share in IG Copper, if I remember correctly.
That's correct. We're in fantastic shape. We have almost as much money in the bank as all we've raised in the history of the company. And 80 some royalties around the world, 40 I think are cash flowing in some form or another, and the business model works.
Fantastic. How much cash flow are you producing per year?
So right now we're in that sort of $3 to $4 million per year. but we've got a very strong future outlooking beyond that, where we're at right now with the Timok royalty in Serbia coming online in 2021. That's copper gold, one of the bigger new copper gold mines in the world, where we're sitting with a 0.5% royalty. That's going to be very significant to us. And then one of the most significant cash flowing royalties that's about to kick in, which is a catalyst. And one of your questions that one of your viewers had was what are forthcoming catalysts in EMX, and that's the lead zinc silver royalty coming online at Balya in northwestern Turkey, and everything on site there is moving ahead. And that was a district scale consolidation where the company that owned the mill bought the project that was owned by our counterparty, where we have the 4% uncapped, unbuyable royalty. And we're very excited about seeing royalty checks coming in the latter part of this year.
Okay. Royalty checks coming is a good point, actually. And I meant to ask in terms of Corona, again, like, unfortunately, we have to keep coming back to that topic.
Yeah,
but
sure.
a lot of mines are shutting down. I think we're close to 150 mines across all commodities being shut down. How do you see impact on, your cash flow? But how do you see that impacting the ramp back up and just in general, the global supply chain? Like, how is that looking?
Yeah, so specifically the two mines, active mines that we have cash flow coming from, the Leeville mine in Nevada, operated by Nevada Gold Mines. We have not heard that they have shut down yet. In fact, I believe there's only one copper mine in the state of Nevada, and no gold mines that I'm aware of, at least. I could be wrong, that are out of production. Also, the Rawhide mine, where we have equity interest in that project, is expected to be a nice cash flower for us as we move into the next year and the years after that. We're very excited about our ownership there in Rawhide. And they just spoke with them on the phone a couple days ago. They have no coronavirus cases. They have very few employees on site. They're all isolated in their haul packs. It's an open pit mine and one crusher operator. So there's a lot of distance between those employees. They do not anticipate needing to shut down, which is very important for us. Now, with respect to, so that's just our micro case, but you asked more of a macro.
Both. Yeah, exactly.
Sure. So definitely big copper mines are shutting down. That it will impede the copper supply. That could be actually bullish for copper prices. And we've been monitoring the copper price very carefully as we moved into this crisis and through the crisis. And copper has been extraordinarily resilient, which I think is telling us something. You've heard the comment before that copper has a PhD in economics, and
Dr. Copper.
That's right, Dr. Copper. So it's interesting. Sure, copper prices have come off, but they haven't come off as much as you would have expected. Nowhere near to the same degree that oil has, as one example. So we view that as cautiously optimistic. And we do understand that China, the world's largest consumer of copper, is going back to business quickly. And so it's not inconceivable that we see a V-shaped recovery here. And we could be in a situation where the copper supplies were already tight, copper mines going out of production, helicopter money and pent-up demand all of a sudden hits the market. That could be actually in the medium term to long-term bullish, but let's assume that's not the case. Let's just assume that copper, of which we have a very bullish outlook for long-term, just has a nice slow recovery and comes back to reasonable prices. Long-term, the price of copper has to go up because the amount of copper being consumed on planet Earth continues to rocket forward. Yeah,
just supply and demand, simple economics, as you said. And didn't Trump announce a $2 trillion infrastructure spend plan as well as part of his packages?
Oh my gosh, those guys can't give away enough money.
Yeah.
Both of those political parties just argue over which one could give away more money. It's just astonishing to me. And at what price is that? And I think that folks smarter than I am with respect to macroeconomics feel that that's devaluing to currencies globally, because many governments are doing this. And so what does that point to? And that points to precious metals. Yeah.
No, I think we're in a perfect rally. And I heard Ross Beatty and others say like $2,000 this year, without a doubt, and might be even earlier this year if the shorts have to cover, right? So at 1642 or something we're at today. So
people in this business will be very happy at $2,000 gold.
Yeah, no, I can imagine. I can imagine the margins are insane. So, you have $69 million in cash, right?
Yes,
so you keep distributing that cash piecemeal, right? So
Yep.
I think you bought something from Revello, but they gave you money back because they owed you money. So you only invested like $750,000 or something into them for their royalty. What do you plan to do with the $69 million?
Well, we're analyzing opportunities right and left, strategic investments, cash flowing royalties, royalty portfolios, other prospect generator portfolios that exist. And we are very scrutinizing, and only the few that meet all the filters and the criteria that we have will be purchased and invested in. You can see the few deals that we've done of recent. They're distinctly accretive deals. And I think you're likely to see more of these small incremental accretive deals being done by us. But the possibility of us finding a big meaty one that we really like certainly does exist, and we're trying for that also. Our main goal is to try and find a big meaty accretive transaction. But if in the process that we're moving towards that, we find small deals that make absolute sense to us, we will execute. And that's what we've done so far.
Okay. I got to ask it because it just came to mind. We've seen two young guys from Cisco leave, start their own company, Guerrero Ventures, and acquiring the royalty packages from Yamana and Orion. That's a massive deal. Unfortunately, I might be misinformed here, but I've seen they only raised $3 million in G&A, and they were looking for like $300 million or something. Like, what's the landscape out there? I might have the wrong information, but I remember they were trying to raise more money. They only raised three. And I think they were looking for 10 times that, in my opinion, if I'm not mistaken. And please correct me if I'm wrong. Like in this scenario, like pension funds and other like generalists have to start reallocating funds, right? Would you be open to such a deal? Let's say you'd have the pension fund of Ontario behind you, or the teachers pension fund of Ontario behind you, buy a $300 million royalty package. Is that something EMX would entertain? Or, as you said before, are you just chasing the small royalties?
All right, that's an interesting question. So what you're asking is, if something really large came along, would we be able to handle that? And the answer is that we've had a number of good groups. I probably shouldn't say who, but a number of strong players in the business, that names you would know, that have said they'd be delighted to syndicate opportunities with us that are too large for us. And I think that syndication is a good way to move forward in a synergistic manner on some of these big opportunities that do exist. So that's a distinct possibility. We do tend to find the best value in some of the smaller overlooked opportunities thus far. But as I said, we're happy to look at the big ones.
I'm just looking up your share price and how you guys been doing. You're trading at $2.05. I think that gives you a market cap of $164 million, and you're Canadian.
$1 enterprise value. Yeah.
That's insane. Are you worried that you might be taken out by one of the bigger guys? Because your TMOC royalty, I'm sure, is interesting to a few folks.
Oh, well, the TMOC is worth more than our market cap, as is the Leeville royalty is worth a substantial percentage of our market cap. A number of different companies have made overtures to us, not on a hostile basis, but on a friendly basis. We believe it's premature to sell the company. The fruit on our tree are just starting to ripen, and we're nowhere near in the right spot in the market cycle to sell. So we're not sellers. We have a young, smart team that has gained a lot of experience over the course of the last 15 years, and we're building this company. It's not the right time to sell. With respect to any hostile bids that were to come in, I think that's unlikely because we're very close to a large majority of our shareholders.
No, that's fantastic. Who are your majority shareholders? Just remind us real quick.
Yeah, so Paul Stevens is the largest individual shareholder. He's bought most of his stock out of the open market. He has around 14% of the company. I'm at 4%. And Sprott Global and their retail clients, and as well as funds that they manage collectively, are in roughly the 30% range. Of course, that would vary as those retail clients buy and sell, but it's a significant percentage. And they've been with us via Rick Rule's passion about this business sector and about EMX since the very beginning, 16, 17 years ago, and still a huge supporter of us. Has been for many years.
I think you're one of his top picks right now, aren't you?
Yeah. I believe that is the case. And then there's some, a number of funds that are in us, some Swiss funds and U.S. based funds, and And collectively, with a few phone calls, we can communicate with 65, 70% of the shareholders.
Oh, that's fantastic. Okay, that should protect you from some shenanigans here.
Yeah. So, and look, our ultimate goal is to do the right thing for the shareholders and make the maximum amount of money that we can. And we don't think the time is right to sell today, but when the time is right, we will.
Okay, great. I've been asking a lot of questions just to have the conversation, get an update from you in regard to obviously what's going on, and you guys are working. That's important. Let's switch over to Twitter. I just switched the frame here, the scene as well. So we got a couple of questions coming in, and please use hashtag AskEMX for your questions here on Twitter. And we have California Miner California on Twitter asking, hello, David, with many royalties to choose from, one of the reasons I'm hanging on to my EMX shares, and I have to switch to Twitter because for some reason my feed cuts it off, and I'm still looking for a solution. If anybody has any input there, please let me know. He's hanging on to the EMX shares is the Ensero deal. Would you please tell us the future upside you see with Ensero? Environmental is huge. So that's the tweet in its entirety.
The Ensero deal is a classic example and a recent example of us thinking laterally as to how to create value for our shareholders. And there's a lot of embedded optionality in that deal. We get a 6% coupon rate on the money that we put into that in the preferred shares that we own. We got 7%, 7.5% of the common shares of that company. And we also get double principal payback at the end of the loan period, the preferred share purchase period. So there's a lot of wins right there. But the biggest win actually is forming a regional strategic alliance with them in the Western U.S. and Western Canada, where we are applying their environmental skill sets to clean up environmentally hampered assets, and then combining our economic geology skill sets to unlock value. They've got a history of doing this. They're the ones responsible for cleaning up and advancing the Keno Hill mine that's been very successful in the Yukon, was a big value add. We're looking for other opportunities such as that. And then with the goal to ultimately using our organic pathway to generate royalties through the unlocking of value in districts that have been ignored because of environmental challenges. So we have lots of ways to win for the EMX.
The penny just dropped for me. Ensero is obviously the spin out from Alexco.
Yes.
Sorry. Yes. Okay.
Well, that was previously Alexco Environmental Group. Exactly. So we bought preferred shares in the company to help them take it private out of Alexco.
Yeah. Another question from California Miner. I know you can find it in its entirety here on Twitter. We're not editing or cutting anything out. And his comment is, circulating around Twitter is CEOs talk of insider buying, but in fact are being paid a large salary with either private placement money or company cash. So therefore, it's not really insider buying because it's company money. Can you comment on that?
I'm confused by the question.
I think it's more about because you have a few royalties and other stuff in your portfolio that is in other public companies. I think the question is more, a lot of company CEOs talk about insider buying right now and are doing some insider buying, but they're still receiving large salaries. So I guess large is relative. And my salary is all publicly disclosed, so you're more than welcome to go and see that in all of our documents. And of course, that's always the case every year forever. My insider buying has been prolific and consistent. I've been buying now for, I believe, 7 years. I've not sold a share for 7 years. I've exercised my options, held the stock, paid the taxes on stock grants, in addition to open market purchases, which have not been small over that time. And that's why I've increased my percentage ownership on a fully diluted basis to just over 4% now. Very bullish. I think the stock's trading at excellent value, putting my money where my mouth is. I bought some stock in the pullback from the COVID related issues. Fantastic. Oh, that's great. I think that's exactly what investors want to see, companies backing their deals, right? Another question you sort of hinted to, it's from Resource Alpha. At Resource Alpha, you mentioned it as the catalysts, but maybe you can be a little more precise, catalysts for the next 6 to 12 months for EMX.
What's Resource Alpha?
Oh, sorry, that's his name on Twitter. At Resource Alpha is his Twitter handle.
Oh, catalyst. Oh, sure. Well, so I cash flow from Rawhide. We're very excited about that. That's a successful startup mine. They're working on.
How much do you expect from there? Sorry.
So I'm not allowed to say because we don't have a 43-101 document completed on that project yet. But we bought it specifically for the incipient dividend cash flow. We expect that to have a very high rate of return. And they're in the process of completing a 43-101, which will enable us to give more specifics and guidance around the cash flow that we expect. But until that time, I can't say it publicly. That's just the law, right? So you know that. The other catalyst certainly is advancement of the huge copper gold mine in Serbia at Timok. The other one is the one I mentioned in Turkey, Balya, coming into full-scale commercial production. We've already received royalty checks from Balya from the small-scale mining, doing the metallurgical testing, and to make sure the mineralization has continuity and has good metallurgy, and it does. That was the catalyst for the buyout by the neighboring company that owned the mill. That's a 5,000 ton per day mill. So we expect those royalty checks to kick up nicely at the end of this year and headed into 2021. So there's a lot of catalysts that are in the near future for us.
When is TMOC supposed to go into production? You said 2021, but is there a quarter or something associated with that?
So I believe they've said first quarter. If there's a slowdown because of COVID, which wouldn't surprise me, maybe second quarter. But keep in mind that Xinjiang, the SOE, that is the counterparty to our royalty there, have signed a memorandum of understanding with the Serbian government to invest $474 million US into advancing that project, and they've defined the timeline, said that they'd be in production first quarter of 21.
Okay, so let's just stick with that for now, because I haven't heard anything out of Serbia in terms of COVID, and I'm sure they have their odd cases here and there, but it hasn't made the major headline news yet. So another question, we briefly discussed that beforehand, and we lost Dave, I just heard Skype go off. Let's call him back. Just before the last question. We're just about to wrap this up here. Dave, you disappeared on me.
Yeah, sorry about that.
Okay.
I had a computer issue, so now I'm on my phone, but let's keep going.
Okay, hold on. I need to reframe you here, because people could just see... okay, how do... let me... Since I'm doing this live editing on the show there. Because I only had one last question. I'm going to ask it... ask you if you can answer it. I'll do the technical part while you're answering it. And the question is, we briefly discussed it before, but how does a company like EMX or other royalty companies model assets that are failing to deliver, right? Since mining is a risky business, how do you sort of account for that? Do you write them off after 5 years, after 10 years, I guess is the question. And the question came in also via Twitter from Oswaldo at OSCW123. So you can find the whole question on Twitter as well.
Yeah, so there's a multifaceted answer to that, and certainly there's specific accounting modeling that has to be done on producing assets that have significant value, and they're either written up or written down annually based upon the production and the forecasts of production as compared to how it was modeled when it was purchased or the last time that an adjustment was made. And so the auditors make comments about that. And so you've seen us make adjustments, if you go back and look at our financials with respect to the Leeville royalty, for example, where they've had a decrease in production related to ground condition problems in the underground mine there. To balance that out, they've had some fantastic exploration success on the property. So that's actually a prime example to look at to see how that's done from an accounting perspective. But I think that the meat of the question actually has to do with how we design a strategy from a royalty acquisition standpoint and manage that risk within our portfolio. And the best way to manage that risk is via the prospect generation business model, or what we call royalty generation, where we are acquiring prospective mineral rights around the world inexpensively, adding value by doing smart economic geology, selling those assets on in exchange for royalties and other cash payments, where we have a very small amount of money invested in those projects. The bulk of the financial burden and thus the risk is on the counterparty going forward. And the bulk of the royalties that we have in our portfolio were generated through that technique. And some folks call that the prospect generation business model. It's a very powerful model. And we do that in addition to buying, when we can, more advanced royalties. And so by having that balanced portfolio is the way that we manage that risk. Now, how many of those projects actually come forward and become producing mines? And the answer is a very few. That's just what the statistics have shown over a long time. That's what we expect. And our business model has that risk built into it. You only need 1 or 2 or 3 high quality royalties to come from the portfolio to be wildly successful, because the amount of money that you're spending to build that generative portfolio is pretty small in the big picture.
Yeah, no, and you've proven that. Like, you guys are actually the best case study for that as well. The sale of IG Copper was the best example for that, and you're benefiting from that now. And that sale happened a year and a half ago.
Yeah, and that sale actually speaks to our ability to think laterally because not only do we do the royalty generation, but we also make strategic investments. So those same economic geologists working around the world will identify an opportunity to say, we cannot not own this stock. We have to own this stock. So, and we make investments. And our track record on the investing side is fabulous, with a better than 40% internal rate of return on invested capital over the last 16 years after tax.
That's insane. That's great. David, thank you so much for joining us. We don't have any further questions here on Twitter, which is great. We got questions coming in. We had like 4 questions asked and answered. So that's really good. I want you to stay safe, stay healthy. And we're looking forward to the rest of 2020. And of course, with TMO coming on in 2021, this is going to be crazy. So thanks for your time and have a good one.
So, Kai, my pleasure to be here, and thank you.